Fantastic. Welcome to another NayaOne webinar. Today we are joined by Ned Phillips. Ned, would you like to introduce yourself?
Absolutely. Thank you, Ollie. Thank you to NayaOne for having the webinar. I appreciate it. So I'm Ned Phillips, founder of Bambu. We are a B2B wealth tech firm based in Singapore and recently been doing some partnership work with NayaOne.
Fantastic. And for those who are watching this, Ned, who maybe haven't come across Bambu, how is it that you support financial institutions? What is your kind of the core thing that you guys are providing?
You mean, Ollie, there are some people who haven't come across Bambu? That's hard to believe.
I know. Just imagine in a world that is the case.
Okay, I'll have to use all of my imagination to go for it. No, I appreciate it. So we're in wealth technology. So wealth tech is the sector. We are B2B, so obviously, or B2B2C, we're designing and building for financial institutions. And what we help them do is really build their own, the common word is robo-advisory application. So depending, where your listeners are listening from, whether that's like a Betterment or a Wealthfront in America, or a Nutmeg in the UK, a Stashaway out in Singapore, when a financial institution wants its own robo-advisory or digital wealth application that they'd like to embed into their existing banking platform, then Bambu's APIs and their SaaS product is what they would turn to. So that's how we help them. We help them onboard retail wealth customers digitally using our robo-advisory technology.
It's really interesting. And I think this is such a hot, frankly, a hot space for a lot of the different areas at the moment, right? Are you seeing a lot of traction? Where's looking exciting in this space for you guys at the moment?
Yeah, we've been around 7 years. We started in Singapore, mainly because I was based here. I've been living out in Asia for most of my life. But I think the reality is this. It's like, 7 years ago, digital wealth wasn't really, I'm going to say, a thing.
Mm-hmm.
Robo-advisory wasn't what people heard about. Mass retail digital wealth wasn't as prominent. But now, everything's gone digital. Everyone's digital. Banking is all digital. And as different sectors, payments, brokerage, wealth, insurance, loans, all gets this kind of digital facelift, it's the right terminology. Wealth generally has been a little bit more of the back of the queue, I'll be honest, in that, pure core banking is first and payments and brokerage. But what we're seeing now, particularly over the last couple of years, is this second tier, third tier regional banks across the world are pushing hard to try to have that wealth upgraded to being purely digital, because the biggest players, the biggest banks, and we've already worked for Standard Chartered, we've worked for HSBC in the asset management space, Franklin Templeton, they have the capital to be able to deploy it. And to be able to invest in digital wealth, because it can be expensive. But recently at Bambu, we've launched Bambu-Go, which is like a SaaS product, which is like a rapidly deployable version of a robo-advisor. And that's where we're seeing traction. For us, America and Asia are big markets. We do have some traction in Europe and Middle East as well. But I think what we're seeing is people are keen to get digital wealth up and running. They want to do it in an ecosystem that they know. And so for us, we're seeing that with our kind of SaaS product, which is the rapid deployment in the second and third tier financial institutions. Seeing some good traction there.
No, it's really interesting, Ed. And I think that's one of the reasons we were so excited to talk to you today, because the US, again, it's very much aligned with between NayaOne and Bambu, right? We've kind of just gone live with Valley Bank, and that's relatively public, and that's one of these regional banks. And then we were talking with you and the team about Bambu-Go, and I think the whole thing is it's a very ready product, right? Maybe. Is it worth just maybe talking about some of kind of what Bambu-Go is offering in terms of and how it's differentiated from even not just your products, but maybe other products in the market as well?
Absolutely. Thanks, Ollie. I appreciate it. Yeah. And you're right. Interesting, Valley Bank. And I know there's a lot of these. Obviously, America has, a large number of banks, first tier, second tier, credit unions, regional banks, et cetera. And I think they're all in this big push now to upgrade. And I think, Valley's done some good work there. So Bambu-Go is a multi-tenant platform. So what I mean is pure SaaS. So we have a one back-end code, but we're able to deploy different front-end versions of that for each bank or each financial advisor. So I think, banks and financial advisors don't want all the same robo-advisor out there. They need to be able to customize it with their own look, their feel, their branding, their portfolios, their number of goals, what they'd like to present to the customer. So previously in digital wealth, that wasn't really available. You always had to do a completely custom build, took 6 to 9 months, cost you hundreds of thousands, if not millions of dollars. Bambu-Go right now, first version, instant deployment. What I mean is you can have your own robo-advisor immediately. You can customize some of the front-end inputs, look, feel, portfolios, risk questions, etc. $99 a month for each institution. Now, of course, that means it doesn't have the wide scale of customization, but then again, that's why we're targeting the kind of third-tier organizations with this. So Bambu-Go is an instantly deployable robo-advisor solution for primarily the smaller or the regional third tier, maybe second tier RIAs, banks, wealth managers. Launched it a few weeks ago. We've had signups in America, Asia, and Europe already. And yeah, we think it's the future of digital wealth because, I mean, look, even in the business you're in, there's a lot of complexities around each of these different integrations. So if you think about Bambu-Go, if you're listening to this, we try to simplify digital wealth, make all of the integration points seamless, give you the customization that's just enough that is needed, but because it's a multi-tenant architecture, you can deploy it immediately. So that's the biggest difference. Digital wealth's always been long time to get set up, expensive and complex. We're trying to kind of tackle those 3 main points.
That's really interesting. And yeah, so the more you speak about it, like I think digital wealth in this particular area is just so, it's an area that everyone wants to address, right? And like you said, it's kind of been at the back of the queue for a long while, and I think tools like this are actually able to make it very, very profitable and very logical in order to bring this stuff to bring it forward. In terms of the product then, so what types of pain points are you solving? What use cases within the digital wealth space? So if someone was saying these 3 things resonate with me, I should come and speak to you guys about Bambu-Go, I should have a look at subscribing for the rather cheap price that you're offering it out for, what would those 3 kind of pain points be that you're fixing at that point?
Of course, that's good. It's a good question. Mass retail customers are low margin in wealth. The pain points are, can you make money from them? Is it even worth building anything for them? And I mean, let's start with those 2. Can you make money from them?
Yeah, no, those sound really interesting.
Therefore, is it worth the capex to even explore that mass retail digital wealth market? And some firms have already built it and they built it themselves. They spent millions doing it. The pain point we're trying to address, particularly, again, I use this terminology, the smaller RIAs, the smaller banks, they don't have huge, so the pain points are, wealth is an area you can make money on, but it has to be digital, and you don't have the tech team, the knowledge, or the budget to be able to deploy something. So you're just kind of losing those customers out. What the pain we're trying to say is, we can make this affordable. Now, of course, with $99 comes the reality that the amount of customization today is limited, but the product works. Like today, we have over 2.4 billion of AUM on our platform across all of our clients, over 300,000 end users. So we kind of battle tested, what do mass retail investors want in a wealth platform? If you were to build it yourself at a small financial institution, there's so many complexities around how do you do risk questionnaires? How do you do rebalancing automatically? How do you do fund redemptions? What happens if a dividend comes? How do you put it into their portfolio? How do you do pricing? So the actual reality of standing up a clone of a Betterment, a Wealthfront, it's that idea there is AUM and margin available to you, but you can't build it yourself. And until recently, there's been nothing. There has not really been this rapid deployment use case. And it took us a couple of years to build. So it has not been easy to be able to do this. So that's the use case. Companies who want to explore mass retail wealth management, want their own robo, could never think they could afford it or have the knowledge or the tech team to do it. That's what we're providing for them.
That's really cool. And so one of the things you said in there was really interesting, in that, like, you've learned a lot of these lessons for these regional banks on their behalf. And One of the things we're often doing when we're working with banks is kind of asking them, what do you care about? What are your KPIs of this thing? Because we're obviously working quite frequently with these large banks to go, you want to evaluate this tech. What, I guess, from all your learnings, if you had to draw out one big learning, one really valuable insight you guys have acquired, what would you go for?
Well, so this is a generic insight, but I think it holds, I think
So,
it holds
no IP
well.
there, Ned. Is that the
No,
reason?
there's no IP on this one. Build it and they will come is absolutely not true. That's the biggest insight, because in digital wealth, when you get a customer, it's not like a payments where it's a one time, like, again, I'm not a payments expert, so I'm not kind of, trying to put any shade on the payments guys. But if you go to a shop and there's a payment facility there, when you tap your card, who the payment facility isn't really your bother, as long as you can tap. But in digital wealth, it's your savings, it's your money, and who you use is important. Now, an institution says, okay, I'm going to build a digital wealth tool and I'm going to build it and everyone's going to come. No, make sure that as much as you're spending on the tech, think about how you're going to distribute it to customers. So that's why I say it's generic. You're marketing your distribution, because we've done some huge builds for customers. And then they were like, oh, we built it. And I'm like, how much are you going to spend on marketing? They're like, oh, none. We're just going to build it and they're all going to come. I'm like, it's not how it works. So with tech, obviously there's a huge amount of tech insights that we've learned and how to do digital wealth properly. And, does goal-based saving work or regular monthly savings? Make it frictionless, make it as simple as you can, but make sure you don't just build it and leave it, because wealth isn't like payments. It isn't just transactional. You have to make it stick in. You have to get it in front of them, and then make sure you use as much data as possible so that customers are like, oh, okay, you told me about this. You kept telling me about this and you made it simple with my data. That's the focus. Keep at it the whole time.
Final thing would be, if someone is watching this, they're excited about what you've been talking about, what would your one ask to them be?
Well, apart from calling on NayaOne to see where Bambu is and partnering with you guys, of course. But I
Of
assume
course. So,
but I would say that, so digital wealth is, so think about it this way. 10 years ago, if I'm sure that even, I don't know how long, let's say 10 years ago, some banks might have thought, oh, I don't need digital banking. Maybe it'll be okay. Maybe I don't. I'm a small bank. I don't need digital banking. It's not coming. Today, if you're a bank, you have to be digital, full stop. Like this, there's no discussion anymore. In wealth, that discussion still happens. You still hear people going, oh, it's okay, I can do wealth offline, or you can't. If you have not, and many digital wealth is far more digital today than it was. All I'm asking, if you're listening to this, whether it's Bambu or one of our other competitors or somewhere, I like this phrase. This is a phrase I hear what the Gen Z use. Don't sleep on digital wealth. I see this on LinkedIn everywhere. Do not, because the people who are pushing hard to onboard your customers, when I say your potential customers, digital wealth is sticky. Like once you get someone and you've got their goals, what they're saving for, and you've got them with their funds on your platform, it's hard to lose them. So all I'm asking is, whether it's Bambu or wherever you get to us, whether it's in Bambu or NayaOne or even another digital wealth provider, don't think that, because there's this terminology, robo-advisory, where people are like, oh, no one's going to use a robo. Robo is the wrong word. Just think digital wealth. If you offer wealth, you should be digital. It is complex. Figure it out, because otherwise the customers will be going elsewhere.
Fantastic. Well, Ned, thank you again. It's been really, really interesting speaking to you about this really fascinating topic. So thank you.
Excellent. Thank you, Ollie. Thanks for all the support from you guys as well. Appreciate it.
Appreciate it.
Thank you.